This is Monty. How you guys doing? I finally got a chance to record a podcast. I haven't done one in a while. So while I'm doing my walk, my 5-mile walk around the neighborhood, finally decided to go ahead and see if we can get one in, provided that the wind doesn't pick up too much and that the car noise isn't too much. Anyway, let's get right into it. So what is the current state of affairs in the crypto industry versus the traditional economy? Well, on the one hand, there's a lot of merging of the two spaces going on. It looks like with the complete implosion, and there's the wind kicking up, with the complete implosion of the traditional economy, there seems to be a lot of institutional and a little bit of retail interest. Now, on the institutional side, the players in the traditional space, MasterCards and the Visas, the banks, for instance, they're starting to take a look at how to stem the red ink. In other words, after the depositors catch wind of the fact that they're not getting very much in the way of interest rates, and the interest rates are getting lower and lower and lower, and the 30-year fixed mortgage, for instance, has come down to 3% roughly, and that is that's a historical low. So it looks like, no matter how you look at earning some sort of return in the traditional space, it's getting to the point where it doesn't look like you're going to have any non-speculative plays as far as how to make money in the traditional space. And by that I mean, the FANG stocks are overvalued. A lot of the assets are mispriced because of federal intervention. When we say federal intervention, we mean liquidity, massive liquidity pumping into the traditional space is causing the traditional assets to become overpriced. So it's hard to figure out where the value is, and fundamental analysis means nothing in the traditional space anymore. So a lot of those players and a lot of the companies, the infrastructure, are starting to take a look at the crypto angle. In other words, if you can offer something like a Bitcoin or any of the other cryptocurrencies, then by historical measures, you can probably determine that it's in your best interest to take a look at the amazing returns that we've been getting in the crypto space. So again, the MasterCards and the Visas and the banks, they want to have some sort of affiliation. They want to have some sort of partnership, even if it's PayPal. It's better to take a look at making the transition as soon as possible. You don't want to be caught off guard if you're a traditional player in the regular economy. The last thing you want to do is have someone come and eat your lunch. So again, it's best to partner with the enemy as compared to being totally caught off guard. Now, in the Bitcoin ecosystem, we're developing like crazy. We're getting lawyers. You can find crypto lawyers, attorneys who can help you out with inheritance. If you've accumulated a sizable portfolio, for instance, in your cryptocurrencies because they've run up over the 4, 5, 6 years that you've been involved, now you can take a look at your choice of lawyers. You can take advantage of CPAs and accountants. If you're concerned that your trading in Bitcoin and cryptocurrencies is going to be a tax liability, now you can work with TurboTax, Intuit, QuickBooks, CPAs and attorneys, Ernst & Young. A lot of these players are starting to realize where the action is. It's very complicated, and the IRS is doing their best to try to figure out how Bitcoin works, how cryptocurrencies work, and they want to come up with regulation. They want to come up with rules to help determine how they're going to handle the tax consequences of what we're doing in this space. So again, if you want to take a look at the career opportunities as far as being a lawyer, or being an accountant or being a CPA, a developer, in any respect, you probably want to take a look at the crypto industry as a way of getting involved with an industry that's actually growing as compared to something that may not be around. Okay? I even hear that because of DeFi, what we call decentralized finance, and that simply means that when it comes to getting loans, when it comes to borrowing money, we in the crypto space, we've come up with our own solutions. We've come up with decentralized finance. That means we can use our massive cryptocurrency holdings to actually loan out and borrow against our portfolios, or against our cryptocurrencies if we want to. So again, instead of settling for 0.1% from traditional banks, we get 5%, 6, 7, 8% on our monies. And I think the wind is going to start kicking in. But we can get huge gains on our money, on our funds in the crypto space. So again, we call it decentralized finance. Go to my website. Hopefully there'll be a link or something, but it's dpl-surveillance-equipment.com. That's DPL, David Peter Lima, surveillance-equipment.com. And you'll get a chance to see lots of information on DeFi, lots of information on lawyers and accountants in the crypto industry, lots of information on the CPAs and accountants and such. You name it. I've accumulated so much information. It's chronologically arranged so that, all the way from the present, where we are now, going all the way back a number of years, you can see how we've evolved and how I allow you to see the progress that we've made over the years. I probably have the largest articles, directory, blogs, and such to take you all the way back so you can see where the industry's come from, where it is now, and get some idea of where we're going based upon my blogs and articles and videos and such, okay? So again, in the traditional space, it looks like, as far as I can tell, we're going to be looking at a situation where more and more companies are throwing in the towel, okay? The airline industry, between United, Delta, and American, they probably are letting go 50,000 people, okay? In the banking industry, they're going to let go, 30,000 minimum. So you got 40 million people roughly out of work. You got mass evictions coming up. The government can't print enough money. People are going to be, those people who've already run to the dollar, and by that I mean they've sold a number of stocks, they've sold a number of assets, real estate, gold, whatever, a lot of them, and they went to cash, okay? When all else fails and you want a safe haven, you go to cash. But the problem is, your government has printed so much that your cash is going to be basically worthless in very short order. That's why you see people with 2, 3, 4 jobs. And see, the gig economy is under a lot of pressure with this pandemic going on, and the recession resulting from it, or actually the recession preceded the pandemic. With both of these things going on, and stalemates in Washington, and the divisiveness with the racial injustice, all this is culminating to a situation where the whole country is pretty much stagnating, right? But you'll notice in the crypto industry, we're not stagnating. We're trying to figure out whether or not we're going to be the currency of last resort. It may be a lot to ask for, but when you see capital flight coming out of China and Venezuela and Argentina and Lebanon, that money needs to get out of those countries. And see, you guys in the United States, you're going to get a chance to see and feel what it's like when your currency is overprinted. In other words, when you go shopping And believe it or not, Jerome Powell, the chairman of the Federal Reserve, he just spoke about a week ago. He said, we're going to ignore the 2% inflation rate, and that target is going to be thrown out the window for the most part, because he feels like we can do more and we have to do more. And see, we have an election coming up. So they're going to take the gloves off. They're going to really start printing. They're going to really start letting things go whatever in the direction of what I think personally is going to result in hyperinflation. Okay? So again, if Jerome Powell ignores any inflationary pressures that usually keeps them at a 2% target and below, if they throw out the window, then what that's going to mean to you guys, that's going to mean when you get your paychecks, you will literally have to run to the grocery store, run to the gas station, run to pay your rent, because just like the people in Venezuela and Argentina and Zimbabwe and Lebanon, the currency is being devalued at such a rate that you can't spend it quick enough. See, when your currency is devaluing at a rate where you can't spend it quick enough, that means you hurry up and buy something with it. You just get your money, get out of dollars quickly. As Anthony Pompliano mentioned, he's a well-known crypto person in the crypto space, very intelligent, very successful. As he mentioned, your wealth has to get out of the dollar. You will not even accumulate any wealth being overweighted in the dollar. Just like the celebrities and the sports athletes and all these guys, celebrities, 5 or 6, 7, 8 years ago, they were actually getting more and more of their assets out of dollars. They were asking their money managers and accountants and such to make sure that they started diversifying away from the dollar. They saw that, that's not where you get value. That's not where you get the ability to keep up with the diminishing purchasing power. You actually have to get your assets out of the dollar as soon as possible. That way, when the Federal Reserve constantly cranks up the printing machines, that means you don't have to worry as much, okay? So that's what you need to do. That's what you need to focus on. And I foresee hyperinflation in very short order, but before you get to hyperinflation, you're going to get a situation where you're going to see more and more people complaining that they can't get as much value out of their paychecks and such. In other words, the government will give you some money, right? They'll give you some stimulus checks, and they could put it on autopilot. They can literally decide, okay, based upon GDP, based upon unemployment, based upon whatever, lack of liquidity on Wall Street, that these checks automatically go out, which is fine, right? To crank out checks to the citizens on autopilot, that's fine and dandy. But remember, if they devalue the currency so much, it still is not going to help very much, and especially when you're in these major cities, New York and Los Angeles and Dallas, Texas, whatever, San Francisco. They won't be able to give you large enough checks often enough to keep you above water. So try to remember this, you guys. Try to stay informed. Come to my website. Listen to my podcast. Look at the videos. Read the articles. Hold on. Because we see a transition coming on, and we don't want you guys, too many of you guys, to be caught off guard, okay? So there's going to be a lot of people caught off guard, but hopefully a number of you will start to take a look at the up-and-coming monetary transition, okay? That means getting out of dollars, getting into cryptocurrencies, getting more into gold, maybe some silver, but anything except a dollar pretty much. Anything except where the Fed is pumping money into those assets, okay? When the federal government gives money to banks like they did with the stimulus checks, that was an attempt to, that actually was a bailout for the banks. That's why the banks made about, what was it, $1 billion? I think could have been 15 billion, I think. But they made a lot of money on fees, and they had absolutely no reason to be making money off of stimulus payments that should have went directly to the people. So open up your eyes and realize that was a bailout for the banks. That was not an effort to help the taxpayers and the little guys. That was an effort to bail out the banks. The banks knew full well that they weren't going to distribute that money anytime soon, and they were going to take their time and basically give the money to their partners and friends and associates, the people who are closest to the bank. And you're not closest to the bank. You're not closest to the money printer. Look up the Cantillon effect on my website. The Cantillon effect is basically a financial type of situation whereby the people who are closest to the government, when the government starts printing money, if you're closest to the Federal Reserve, if you're closer to the Treasury, your dollars are going to be worth more than my dollars. If I'm just a taxpayer and I'm waiting on a stimulus check, by the time I get my money, the inflation that's occurred already is going to make my money a lot less valuable than your money. If you're close to the Federal Reserve, you're a huge company. The Facebooks, the Googles, the Amazons, the Warren Buffetts of the world, Jeff Bezos, all those people, they're close to the money printer. They get money that still has a lot of value. It's freshly printed dollars, still has a lot of value. By the time the stimulus checks come, a lot of inflation has occurred already, and if you get $1,200, you'll be lucky if you get $500 worth of value from it. Okay, that's why, again, by the time you go shopping, pay some gas, groceries, rent, blah, 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 your money's gone really fast. It's already gone, because just like they're learning in third world, or they've already learned in third world countries, you can't keep printing, you can't keep devaluing your currency, otherwise you're going to be in a situation where you have to protest, you have to get out into the streets. You can't work, you're on lockdown. Companies are using the lockdown as a reason to further automate your jobs. I'm already seeing that the meat packing industry is automating. They got robots for meat packing. Pretty soon the robots are going to be in the fields out there with the strawberries and the lettuce and whatever's growing out there. They're going to be out there picking and packing directly from the farmland. That's when you're really going to see some issues, because a lot of those jobs were viewed as the last bastion of hope for cheap labor and just labor straight out, where you use people. See, certain areas they're under pressure, a lot of pressure. So keep your eyes open, your ears open, and just make sure you understand that. Prepare for the new skills. The transition looks like it's going to be going towards catering to the new industries that are coming up. And the crypto industry with our blockchain, that's immutable, unchangeable, decentralized, auditable, permanent record keeping, distributed worldwide. We have nodes, what we call nodes, and outer space. Those nodes, NODES, they actually keep transactions logged and recorded even in outer space. We can transmit Bitcoin transactions or cryptocurrency transactions, Wi-Fi, Bluetooth, satellite, microwave, FM, you name it. There's pretty much no stopping these transactions. So you talk about EMPs, you talk about all these situations. You literally have to destroy the planet in order to keep these transactions from being transmitted. All it takes is one node out of the millions that we have to recover the complete blockchain and start up again where we left off in terms of the record keeping and the transactions going back and forth between people. So there is no way to permanently erase this. That's out of the question. It's not going to happen. So anyway, I'm going to wrap it up. And I hope you got something out of this podcast. I hope you see the light. I hope you do yourself a favor and your family a favor, your friends, relatives, and associates, and start to understand where the action is and where it's not. Okay, that's what's more important, where it's not. Okay, but anyway, go to my website, take a look at the articles and the blogs, and take a look around and save yourself some anger and grief. Have a good day. Thanks. Bye.